This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 228 is brought to us by Bybit. There are so many promotions going on at Bybit at any one given time. There's no way I can list them all. Let me just list you one of them. For new signups through my affiliate link, if you're in the EU, there is something called a lucky draw, which they have often, and you can win a Rolex or an iPhone 17 or $50 in USDC. It's quite a tiered promotion. And you don't have to do anything but sign up. It's just you show up with Bybit and you get things. And again, if this doesn't apply to you, so what? There are so many things there that do and will. If you want in on this, all you got to do is go down to the show notes and click on the Bybit blog. At the bottom of that blog, there is my affiliate link for you to click, get yourself signed up, deposited, and trading. And this whole world becomes yours because with Bybit, membership has its rewards. It is a 10-Minute Contrarian podcast and a bit of a slow week in the markets. So what a perfect time for another concepts episode. Now, these are the cornerstones of this entire podcast, so I suggest you listen closely because these, probably more than any other episode, are the types of episodes that we always end up circling back to. And really, if you understand the concepts episodes, you almost don't need to listen to the podcast. You can just do all of this yourself, and your results will be amazing. Because all we do here is follow the concepts, and then over time we just end up with ridiculous results overall. Now, it's tough for me to sit here and say, like, I'll put my record up against anybody's because I almost never sell. I do plan on selling, but I just haven't sold much yet. But if you take unrealized gains, and if you count that, there's got to be nobody out there doing what we're doing because the concept really of what we do, I would say if you're new or if you came in kind of at the halfway point, make sure you listen to probably the first 6 episodes and then episodes like Boom Bust Echo, maybe more recently like a Scarcity Mindset, episodes like that. It's quite simple. We invest in things with tremendous upside. Now, when you do that, you end up also having to take a lot of really bad losses in the process. But that's okay because your wins are so big, they have the ability to erase a lot of those losses and still give you nice gains. But where the magic really comes in is when you do what I have always been known to really focus on, and that is eliminating the losses that are out there. And when I first talked about this probably 8 years ago, this was such a contrarian concept, but it was such an obvious concept that eliminating losses is really the key to victory. Win by not losing. And if you can do that and then find great asymmetrical upside also, like I don't think people understand how ridiculous this is. Just like I don't think they fully understand yet how magical fixed supply is in something like Bitcoin. But anyway, when you put all of these concepts together, absolute magic happens. And those of you who have been with me since the beginning, or at least near it, you have seen this play out. You understand just how bananas your portfolio can be results-wise by employing these the right way. Like, I could easily charge $5 an episode, and you would be stupid not to pay for that. Because I'm going to say it again, the results here are like no other. And when you say things like that, you can really open yourself up to a lot of criticism, but it's all right here. Nobody can call me on it. Now, I have had losses. You're always going to have losses. However, today we're going to focus on the 2 biggest losses I've ever had, and how if I just simply followed my own rule, those 2 losses wouldn't even exist. And Jesus, then what would my results be? What would our results be? Like, as off the charts as our investments have already been, they could have actually been better because we would literally eliminated our two biggest losses had I had just followed my own rule. Now, I made sure that I had gotten almost all of my stupid mistakes out of the way before I started an investing podcast. That's just a responsible thing to do. But if you're not growing, you're dying. And I grew up a little bit during the years this podcast has been on the air, and you guys got to experience it in real time. So let's go ahead and talk about this concept. And you saw the title, being too early. It's really avoiding shiny object syndrome. And that's kind of an obvious idea. But let's drill down and talk about what it means in the scope of the way we invest. Because I don't know if we've ever really talked about it, so I think it needs to be done now, because this is really a key concept. And a mistake that's actually pretty easy to avoid if you're aware of it. But again, it can happen to all of us, even the guy who crafted this style of investing. That's me. Now, I didn't come up with asymmetrical investing, but all of these concepts and ideas put together, I have made my own. And I have shared that with you, and we have done very well together. But let's talk about how we can do even better than that by learning from my mistakes. So when I say avoiding shiny object syndrome, we here at the 10-Minute Contrarian podcast never want to get in on the ground floor of anything. Now, why would you never want to do that? The ground floor is a great price to get in on anything, VP. Well, what if I told you you could still get in on the ground floor or very close to it after the concept has already been relatively proven, taking a lot of the guesswork out of it? Now, by proven, that's going to be the toughest part of this whole equation. And I'll go over the very simple equation towards the end of this episode, so make sure you stick around. That's really going to be the payoff. The one thing you can burn into your head and take with you going forward now and forever. But I want to go back to one of the episodes that I've already talked about today, and that is boom bust echo. You have to know what that is, because the way it relates to today's concept is, instead of getting into a brand new sector the moment it comes out, and believe me, when it does, there's going to be so much hype, and there's going to be so many people bragging about the profits they've already made, and you're going to hear things like, oh, it's just a brand new paradigm. This is the way things are going to be now and forever. Instead of investing then, which is setting you up for a much higher percent of losses. Yes, the upside can be absolutely extraordinary. I get that. But the percentage possibility of you losing is much, much, much higher. And this is exactly what we're trying to avoid, because most people won't be able to. And they will end up taking losses that you will not take. And that really is the key. This is great. We are really in a very specialized bracket here, because there's really two types of people when it comes to these brand new, exciting technologies. There are those who are probably going to get wrecked. And then there are those who are not going to get wrecked because they're going to avoid things like this. The problem with them is they avoid everything. Like, we're talking about the people who still think crypto is a scam. You're no-coiners, those people. So you're either way too reckless or you're way too conservative. That is 99.999% of people. We here do things differently. We wait for these new technologies to boom bust echo first. Why? Because they always do. Just go look back at your history. Crypto, for example, has done it many times. But you can always count on one. And I think a really great one to talk about, because it's going on right now, is AI. Now, AI has had a much longer ground floor run than I would ever expect it to. And yes, a lot of money has been made in very AI-specific stocks. Now, I don't count stocks like NVIDIA in this whole pool because NVIDIA was around long before this, and semiconductors were a thing long before this. I'm talking about your very AI-specific stocks that people have made really great money on in unrealized gains. Mind you, a lot of these people just never sell until it's way too late, and you're going to see that happen again. But what is almost certainly going to happen is you're going to have that big hockey stick rally up and then a big hockey stick rally down. The boom and then the bust. And then there's going to be typically an echo phase. They are of varying lengths, so don't ever think you can predict how long it's going to take. But there's going to be a dead period after the boom and the bust. That's the echo phase. And this is where the real contrarians buy. And what makes us so rare and so uncommon is that most people don't and aren't going to want to buy during this time because sentiment is going to be very low. All of midwit investment Twitter they're all going to say the same things. They're going to talk about AI, for example, in the past tense. Just like anytime crypto has any type of drop, all these people talk about crypto in the past tense or one of the sectors in crypto. Like, remember NFTs? They'll be back. Maybe not in the form that you're talking about, but that technology is not going anywhere. That was a breakthrough technology that has a bananas utility, and you simply cannot stop technology. Even if you hate it, it's coming whether you like it or not. But it's very predictable, contrarians. This is what sentiment sounds like during the echo phase, and that's exactly when you need to buy. And you should be used to hearing this just by simply being crypto investors, even in the last maybe 2 years, even if you're pretty new to the game. You've heard this poopy sentiment many times already, and you will hear it again. And you should know by now that this is when you're supposed to be buying. But we've already talked about when to buy a lot on this show. Let's focus more for the rest of this episode on when not to buy. And that's going to be at the very advent of some of these new technologies, new concepts in the TradFi world, and on the crypto side, a lot of your new tokens. Like I'll get people all the time asking me, "Hey VP, what do you think about this brand new token that just surged into the top 100 for no good fucking reason?" And my answer is always the same. I don't invest in version 1.0 of anything. I have legit been asked many times about tokens like BitTorrent, SafeMoon, SushiSwap. And for this reason, I just have no interest in them. Now, every once in a while, you're going to find a token that surges and sticks around. I think, for example, Hyperliquid has a good chance to do this. And if I missed it, then great. Who the hell cares? It's crypto. And I have an abundance mindset. And so I understand you can't kiss every girl. Now, Hyperliquid won't be the only token that goes crazy and becomes a thing permanently, and I missed it. But almost everything out there either has already had a boom-bust echo cycle or is about to. Just remember that. On the TradFi side, we never talked about some very hypey things that have happened on the TradFi side during the lifespan of this podcast. SPACs, for example. Remember how hot those were? I never fuck with SPACs. I got them, I understood them, but I'm like, okay, let me see how these things actually play out first. Long story short, it's a good thing we never got into SPACs. But they are back, oddly enough, and we'll see how version 2.0 goes. And who knows, I'm taking more of a sit-and-wait approach again on these. On the dividend side, things like yield max style ETFs that promise and do often deliver outsized dividend returns. And I got a lot of questions on these back when we were talking about dividend stocks and ETFs. And I'm like, no, I'm just not interested. I have to give these things a real run to see how they do. And overall, they have underperformed stocks and ETFs that give you half of the yield. So it just goes to show, Or like right now with Bitcoin treasury companies. I'm not messing with any of those. Win or lose, I don't care. It's too damn early. There may come a time where these things start to outperform because they've been modified and simply work better and fail less. But it's like, when these things are brand new and on the ground floor, let other people fuck with them. Let them take the unnecessary risk. Let them take losses while we don't. While we keep our loss count at a dead minimum. I'm telling you, contrarians, combining this with an abundance mindset, knowing that there's going to be so many more opportunities coming your way, and having the patience to allow the boom-bust cycle on all of these things to play out, this is the way. I haven't given out the complete equation just yet. Stick with me. But really, if you think about it, those of you who've been with me since the beginning, the two biggest losses that I have taken, I think I even did a dedicated episode to this, but the two biggest losses I have taken on this show when it comes to sectors, can anybody name them? There are two. Carbon credits and Metaverse Web3 gaming. And in both cases, I fell for the new paradigm idea, where it's like, look, you better get in on these things now because this is just the way things are going to be going forward. I know it's brand new. I know it's untested, but it's really going to be up only because this is just the new way of things. And with carbon credits, I took a loss and I sold, so that was a big loss. Now, with Metaverse Web 3 stuff, I never actually sold the majority of it. I still have it, so is it a loss? It actually is, contrarians. There is such a thing as too early because there's no guarantee that a lot of what I hold is even going to get back to even. Like, I could be right about the sector, and I think I'm going to be, but wrong about a lot of the individual titles and tokens that I held. Now, I'm not talking about more broad-scale macro plays like IMX. I'm talking about a lot of the in-game NFTs, and individual title tokens that I hold, like ILV, for example. I'm not upset that I hold these things, but looking back on it, the money I spent on this could have been better deployed elsewhere. I could have waited for the boom-bust echo cycle to play out. We are in the echo cycle right now, so it's probably a much better time to buy now than it was when I bought. And lesson learned. But those of you who have also followed this podcast since the beginning, if you would have taken those two losses away, just take them out of the equation, how many losses have we really had on this show? Very, very few. We currently have laggards in our portfolio. You're always going to have those. But to have very few losses and to have wins that win tremendously, that's the name of the game. And the way you get there is by avoiding shiny object syndrome, step number 1. Step number 2, allow these things to go through their boom-bust echo phase. Sometimes it happens very quickly. Sometimes it's a bit more drawn out, like we're seeing with AI right now. So step 1, avoid shiny object syndrome. As much as you're going to be persuaded into it and persuaded to FOMO into a technology that's not even proven yet. Step 2, allow the boom-bust echo cycle to play out. Step 3, now you must decide. If it was super easy, then everybody would do it. But look, at this point, this is the tough part. You have to decide if this technology or if this new thing is going to be inevitable. And if you can make a real case for that, well, then that's great. Because guess what? You can now get into what is probably going to be an inevitable technology or an inevitable way of doing things or an inevitable thing the world is going to need for an extremely cheap price. And if you're right about this, then the final step is to hold on to that thing until the rest of the investing world finally figures this out too. This may take a while. That's the The downside, I guess, of literally front running everybody. Wall Street, Main Street, entire sovereign nations. You never know when, so don't play that game. Avoid the shiny object phase. Wait for the boom bust echo. Decide if it's inevitable. And if it is, invest at a very low price. And simply wait. If you do this, it will be extremely hard to lose. I mean, even if you take my 2 losses, I have not reinvested in carbon credits. I don't really plan to. But I do think that metaverse and Web3 gaming is absolutely inevitable and should be invested into now, but on a very broad scale. Like I said, tokens like IMX I think are great for this. If you pay attention to the blockchains these things are going to run on, another great way to play it before we have the certainty of which titles are actually going to go. Absolutely. I just played the sector wrong many years ago. I should have waited until later. I should have taken my own advice. But contrarians, if you just simply follow this formula the right way, you've seen what can happen. There's no ifs or maybe. This is just how it works. You can and should see outsized returns that will dwarf anything you will ever see on Wall Street or from paid newsletter writers, anything. You won't really need anybody's advice going forward. But for what it's worth, I will continue to give you mine for free. In exchange, all I can ask is at the very least, if you're listening to this on YouTube, give it a thumbs up. If you're listening to this on a podcast player, give it a 5-star review. If you are someone who trades, please trade on Bybit or Blueberry Markets, or if you're American, Apex Omni. Links are all down below. And if you ever decide to join a prop firm, please consider Maverick. Those are the things that keep this going. They keep it forever free. And even though you now fully know exactly what to do, we will keep the ideas coming, because if you just simply follow this playbook and have the patience to allow that first boom bust echo cycle to manifest itself, the only thing really left to do at that point is to hold your nose and buy and understand that it's going to seem crazy. But you're certainly not crazy. You're just early, and you're being smart about it.